I'm Sapan Ghai. I'm Chief Commercial Officer of Sovereign Metals. Sovereign Metals is developing the Kasiya rutile graphite project in Malawi. We are positioning to become the largest rutile and graphite supplier in the world and the lowest cost rutile and graphite supplier, as well as sustaining a low carbon footprint in doing so.
Sapan, good to see you.
You too.
Been a while.
Just a bit.
But you've been doing a lot, right? And there's been a lot happening in the sector as well. In fact, we should have spoken maybe a couple of weeks ago when this MSP announcement came out, where I think countries are starting to get behind the idea that perhaps need to help mining companies finance these projects. And tell us a little bit about that initiative and maybe what the implications could be for you guys.
Yeah, so we were invited to an event on the sidelines of the UN General Assembly a few weeks ago. It was we were invited by the US State Department and the MSP. Now, the MSP is the Mineral Securities Partnership.
Yeah,
it's basically as you know, I think one of the journalists has termed it the NATO of critical minerals. So you've got 14 countries around the world: the US, the UK, Japan, South Korea, Germany, France, and the EU, with a view to securing critical and strategic minerals. I think a lot of these policymakers have they've woken up to the fact that actually you can't simply be dependent on the likes of China or Russia to produce critical minerals or produce end products from critical minerals that are required for anything from defense, aerospace, medical applications to feed your population.
Yeah, the whole geopolitics is really kind of, pardon the phrase, blown up in the last sort of 18 months with Russia, Ukraine, but also a few tensions with China and the US, etc.
Yeah, look, from our perspective, so we've got the one project here, as you know.
Yeah.
Two commodities within that one project: rutile, which is the highest grade, purest form of titanium feedstock you can find on Earth, and graphite, which ends up in lithium-ion batteries. So you've got on the titanium side, what we saw on the geopolitical sphere recently has been obviously when Russia invaded Ukraine. Russian titanium was embargoed. Now, prior to Russia doing that, there were only two places in the world you could get aerospace-grade, defense-grade titanium metal from, Russia and Japan. So now that we don't get it from Russia, you see the Japanese titanium players looking for raw material in order to produce that titanium metal that the world is basically dying for. And on the graphite side, we've seen the White House, we've seen the EU all put tariffs on Chinese graphite. So you can see what Chinese graphite, as well as actually on EVs produced in China. So you can see why that whole geopolitical ecosystem has its eyes on Sovereign Metals and on Kasiya right now.
Right. Okay. So there's a kind of bifurcation of the market, effectively, which should do wonders for price. I'm sure the industry don't want to hear that, but for investors, potentially for the companies, the ripple effect is that companies become worth more as a consequence. That's what we're saying.
Yeah, but essentially, look, we've got to a point where we're not. I wouldn't say we're price agnostic, but we know our cost profile for the project will be such that we're essentially at the bottom end of the cost curve. So we've got a certain amount of leeway on the pricing mechanics of it all. But you're right, it will all play out definitely over the coming years. Whether that's as a green premium, which I'm not sure whether that would actually ever occur, or as a kind of a friend-shoring, onshoring premium.
Yeah, it's probably the latter. I think that kind of greenification of a lot of these metals over the past ESG years, I've never really been a fan or a believer in. Coming back to the MSP, this kind of the NATO of critical minerals, what does that actually look like? Is it going to be usual politicking and all talk, or how does it actually convert into making money available?
So the actual event that we presented at, so we were one of only two mining companies actually on stage. Right. And we were with the other mining company, and that other mining company just so happened to be Rio Tinto. So the CEO of Rio Tinto and our chairman were both on stage talking to a room full of people from MSP countries, but those people were foreign affairs ministers, state ministers, but also, development finance institutions, export-import banks, export credit agencies, who are all backed by these governments. And the entire onus of the day was, look, this is how mines or projects such as Kasiya can be absolutely critical and globally strategic to all of UMSP countries.
Yeah.
This type of project needs to get off the ground. How is it that you as governments and balance sheets, essentially, how are you going to affect that?
So it's a case of why you need to, and then how are you going to? That was the conversation.
Yeah. So the why you need to is the politics of it.
Yeah.
And how are you going to is the finance of it. And this was the meeting of the policymakers and the financiers in one room.
So you and Rio.
Yeah.
How'd you get that gig?
Oh, we were actually invited by the US State Department. We've been over to DC a couple of times.
Yeah.
Met with them.
So have lots of people there.
What's that? Sorry.
So have lots of people. So
it was quite an interesting first meeting we had back in November last year. Yeah. Myself and the chairman walked in. We told them what we had, and their jaws hit the floor.
They went, hello.
Yeah, pretty much.
Okay, but obviously the other thing is, obviously, your shareholders will know, and anyone looking at it will know, Rio is already a partner of yours.
Correct.
With the project. So maybe explain exactly how they're working with you from the investment last year through to what they're actually doing for you.
Yeah, so Rio came in July 23. They invested 40 million Australian dollars for 15% of the company. That $40 million is to advance Kasiya through DFS. It's to get us through things like permitting. It's to get us to qualify and market our products, our end products, specifically around the graphite, because we're pretty certain on the rutile side. We already had MOUs on that side. So that was in July 23. July 24, Rio exercised an option to go from 15% of the company to 19.9% of the company. 19.9% being the maximum that they can hold before a mandatory takeover offer or takeover bid under ASX regulations. And they invested another $18.5 million for the privilege, essentially. Right. So we're nicely cashed up. We're using that cash at the moment to move the project forwards from a PFS that we started in September. Well, we completed in September last year.
Yeah.
That PFS was a standalone sovereign pre-feasibility study. All those numbers were just sovereign individuals. Pre-Rio. Rio had no sight of that. Even though they came in 3 months before, they had no sight of any of those numbers or assumptions or the configuration of that. Mm-hmm. What Rio's brought in alongside lots of dollars is decades of understanding. How do you mine these huge projects? How do you optimize these huge projects? How do you actually, what's the end game? Make money out of that.
So it's not just money. It's they have a titanium division. Is that right?
They do. They're the world's largest titanium dioxide producer outside of China.
So they have specific knowledge as well as general knowledge about how to build these things out.
Yeah.
Okay. So they're putting that data into this program.
Correct.
So what is it? An optimization of sorts?
Yeah. So we're using you can imagine we had a list of assumptions under the PFS. Taken that list of assumptions and put a lens of Rio's know-how over each of those assumptions, and we're working through that list to best figure out, in the PFS, we thought we would mine in this sequence and in this pattern using the following equipment. And Rio's gone, having done this for 50 odd years in places like Madagascar, maybe you want to do X, Y, Z.
Okay.
And what we've been doing since, I would say, May this year is actually what we've called the pilot phase, which is actually doing that on the ground at a smaller level than what the full project will look like.
Yeah.
But it's real data, real empirical data that's being generated through a test pit that we mined. We've dry mined it, we've hydro mined it. We are backfilling it. We are understanding the tailings deposition of it. We are processing some of the material. We are producing, product from it. So this is a step that a lot of juniors usually don't do.
Well, they usually do it after a DFS.
Well, they usually don't have the capital to do so, or the know-how. And with Rio, we've got both of those. So what we've done, we're doing what a major would do before implementing an entire tier one, mine, is to test it out.
But you're doing it with their money and not having to raise money. So that's kind of that appeals to me, I'll tell you. So that's kind of interesting. And how much longer left on that process?
About a month or so.
Okay, not long. Yeah. I guess one would have to ask the question: Do they need any more data? I think you as a company. So I'm just trying to think out loud. You as a company would probably need to be seen to go through a DFS phase. They presumably don't need that. They've got 50 years of knowledge of how to do these things. So it'll be interesting to see how that plays out, as it were.
I think if you take a step back, I think you get way more data from actually mining a deposit than you do sitting behind a screen with a bunch of consultants.
So he'll tell you whatever you want to hear. I know. Whatever they're paid to say. No, I'm being facetious slightly. Okay, well, that's an interesting one. So in another month's time, you'll have done the process which Rio wants you to do, and they want to be able to get the data that they believe they need. And what happens at that point? Is there a discussion at that point, or do you move through the phases again? They presumably don't want it, but you've got to.
For us, it's a case of everything that we've learnt from the optimization will feed into the scope for the DFS. So for us, we'll start the process of completing that DFS, having more data than you could imagine for
interesting
for a project this size.
Oh, full stop. Okay, I'll leave that there because you're not going to tell me anymore. I know you're not. Let's look at the what-if scenario, if you don't mind. Okay, so Rio up at 19.9. They've shoveled in for what? Do you say 58 million in total? 40 plus 18. Yeah. So that's a kind of big commitment. They're going to get to the end of this phase and look, okay, we want to do something here or we don't, right? If they don't, that's the what-if scenario. Is this thing still valuable to you? And, what does it mean?
Yeah, so look, even before we had Rio on board, we had numerous discussions with off-takers of rutile or off-takers of graphite, especially on the rutile side, where this is the first rutile-dominant deposit.
What's this?
That's rutile. That's actual rutile.
I don't know which camera we're looking at. In here, I'm not going to empty it everywhere, but some black powder it looks like. Yeah, so it's black sand it looks like. But what are we looking at there? Because that's the good stuff, right?
That usually sits in my office around the corner. But what it is it's a sample from the original sample that we produced back in 2019.
Right.
Where we were like, hang on a minute, why have we got titanium in a graphite zone, and turns out to be rutile, and this is what we shipped to the chemical players, to the titanium players,
so that's
to
the purest
Rios.
Form of rutile.
That's about 96% titanium dioxide.
What's that worth a ton, or however you measure it these days?
About $1,500 to $2,000 a ton, depending on who you're selling to.
Okay. Good margins.
So yeah, each pinch of that is about 20 odd quid. So.
Right. Okay.
Yeah.
So with the I know I'm bouncing around here, but if you do go on your own for whatever, I can't believe you will, but if you've got something good here, how many people have been testing this stuff?
Numerous.
Okay.
All the key players in the market.
Right.
And it's something that we did way before spending shareholder money on, well, how big is this? What kind of resource can I put on it? What kind of grades can I get out of it? The first thing with any kind of deposit that's, an industrial metals type of deposit, such as this, is, and bearing in mind this was the first rutile dominant deposit found in over 70 years, so we needed to make sure that it was accurate. Is it saleable?
Right.
A bit too much uranium in there, a bit too much chromium in there, a bit too much thorium, any of those, and it's worthless.
Yeah.
Right? And there's lots of those pockets of titanium. Titanium itself is not a scarce element, but saleable commercial titanium feedstock is.
Okay. So if we carry on down this route of what if, People are testing it. It's 96% at the moment. Do you look to try to improve that, given what you've learned recently, or
no? We don't do that. Chemical players will do that,
and you don't feel you need to sort of solve that problem for anyone.
We're geologists, miners, engineers, and we're not chemists or pigment specialists or metals specialists in the context of producing titanium sponge, which in itself is a very, very specific industry. I mean, the fact that only Russia and Japan have been able to produce aerospace grade titanium tells you, just how much of a closed industry that is.
Right.
We're not talking about breaking into those kind of
worlds. You're not going downstream.
No.
Don't need to. Okay. Sticking with the U thing, I'm just looking at the landscape the last 12 months. I'm looking at economic studies which have gone horribly wrong because the cost structure is awful. They're up in the top quartile in terms of cost, i.e. extremely low margin, if not loss making. We've seen builds, not able to get funded as a result of, whether it be market machinations or people don't believe the company can, sell into an economic environment. We've seen companies which have halfway through builds and stop because it just hasn't gone to plan. We've seen companies in production fall over. We've seen tailings dams. We've seen heap leach collapse. We've seen everything. Mining's not easy, is what I'm saying. Clearly, with someone like Rio, you've got someone who's been through it, done it, using their own balance sheet. They'll just crack on. In that scenario, if they decide in a month's time this thing's what they want, I suspect they'll get on with it. If they don't, for someone like you will have to carry on, go through those phases in terms of economic studies, etc. In which is still a tough market. Do you think that you can sell that to the market? Do you think that this is something that the market wants? Is there economic viable argument for why that matters?
I think the best anecdote to kind of get you to understand, the possibility or probability of us going ahead with it is we entered this investment agreement with Rio Tinto. Part of the investment agreement is that we don't give away offtake to other players for the time being. That hasn't precluded potential off-takers from coming to site, even like 3-4 weeks ago, testing the product, understanding the product, talking to their own financiers about what they would like to do with it. I have no qualms that we could sell our product into the market, and there would be potential off-takers. We would happily fund this project into production.
Okay, and you already said once in this conversation, you're lowest quartile.
Correct.
You're a low-cost producer.
Lowest cost. Forget quartiles. Lowest cost.
Lowest cost globally. Okay, that's kind of important. That's really, really good. You've also reminded me the scale of what we're talking about, because the scale, there's two ways of playing it. Either you produce a ton of this stuff and you become basically a industry killer for many. It's please people kind of entering. Or you say this has got a 150-year line of life of mine. How do you play it?
So let's look at the titanium side of the equation. So titanium, 8 to 9 million tons of titanium feedstock is produced and sold today. 8.5 million tons of that, about 95% of it, comes from substitutes to natural rutile.
Right.
So that's mining a lesser form of titanium dioxide called ilmenite, smelting it, roasting it, whatever you need to do to get it to like 85, 88%, 90% TiO2. Bearing in mind that's 96% in the ground. Right. So that makes up the bulk of feedstock. Rutile is only 5%, and the reason for that is not because people don't want it, it's because we just don't have enough. We produce about 500,000 tons of rutile globally. 5 years ago, it was about 750,000 tons. In 5 years' time, it's going to be about 250,000 tons. We're talking about producing about 220,000 tons a year for the first 25 years, if not 50 years, if not 60 years. Even at those levels, we're only bringing rutile supply back to today's levels. You're not flooding the market.
We're not flooding the market. Because there's a whole thing around pricing, and people need to understand. It's like scarcity is a good thing, not too much scarcity, because people then substitute other stuff in, so you're sort of alluding to. And too much of it means everything gets super, super cheap, right?
Yeah.
So there's basic 101 type of economics. For you to kind of come in with this kind of scale project that you've got ex-China into whichever Western markets, presumably, you're not going to... Would you supply into
No,
China,
look,
do you think?
everyone we've talked to, bar one, has been outside of China.
Okay.
And the bar one, funnily enough, is about a month and a half, 2 months ago, we announced that we had tested our graphite within a battery.
Yeah.
And we were say cheeky enough to compare ourselves with Chinese battery spec from Chinese graphite, which ends up in your Fords and your Teslas.
Yeah.
And that comes from a company called BTR. I mean, BTR produces like 20% of all graphite anodes in the world, full stop, right? They are the leader, which is why it makes sense for us to compare ourselves to them. And, we matched, if not surpassed, and you wouldn't be surprised that, we got a call from them as well.
Right, okay. I guess where I'm going with this is in terms of, how some companies in some sectors can manage global pricing, shall we say. The Chinese are accused of it all of the time, but it sounds like there's enough demand ex-China that you wouldn't have to necessarily rely on any component there, nor sign a big enough contract with a Chinese player that they could control your pricing. Sounds like you're in control of what you sell this at, market allowance.
Yeah, but again, we don't care. I mean, on the graphite side, we honestly don't care. It cost me $80 a ton to produce a ton of graphite that sells at $600 a ton today at the lowest end.
Okay.
Everyone else is, looking at $500 to $1,300 a ton. To get it on a ship, it cost me another $100. So it's less than $200
got
to
a lot of wiggle room.
Have factory grade graphite
Yeah.
as much as you want.
Yeah.
To wherever you want.
So I guess you're answering my question, which is basically, if Rio decide not to go ahead, you believe you can get this thing financed, that those MSP conversations help, the off-taker conversations help, people testing this product, help you understand what's going on out there.
Yeah.
I think.
And look at the team, right? Look, we've built out the team as the deposit's grown almost, and we've moved on from, couple of geologists who, serendipitously found this amazing tier one deposit through to now, our team has, the core team in itself, we have about, 250 years of experience of building more than a dozen mines around Africa, financing those mines, getting them into operation, so this is par for the course for us.
Is there any competitive tension there? Like, I know Rio's sitting at 19.9, right? If someone comes in, do they have right of first refusal? And what does that mean?
Yes.
And if there's competitive tension, what would it take?
So Rio do have right of first refusal at the asset level, at the project level.
Yeah.
They also have a preemptive right to match any future investment, to keep themselves at the 19.9% at the top co at the shares level. Or the listed company level. Look, we're not running processes or anything to find out what that competitive tension looks like. I think anyone who's within the titanium sphere, within the graphite sphere, within those kind of critical metal sphere has eyes on us, knows who we are and where we are. So,
I'm being greedy here as an investor. I'm thinking, am I in for a treat in a month's time? Or if there was some competitive tension with some other party coming in, that could clearly drive the price up, because you're talking about at asset level. I'm invested at pubco level. Investors are not invested at pubco level. I make my money here. You've got to obviously drive the price here, and I've got to try and work out what's the upside for me over here. If the shares don't move, well, if they only go pop 30-50%, I could see, well, come on.
Yeah.
Come on, guys, help me out here. Or you say, well, actually, that may be the case, but then we've got a lot of cash in the business. we'll tell you how that works. I mean, how do you look at it?
So far, I think our strategy of just moving the project forwards has worked, and that's what we'll continue to do. So we'll get to the end of the optimization. We're not going to take a pause there. That optimization will feed straight into what the DFS will look like. We'll start building out the DFS, start doing the DFS next year.
Yeah.
Just bear in mind that the investment agreement we do have with Rio Tinto has a long stop date on it. So
Right.
90 days post a DFS coming out, Sovereign announcing a DFS, Rio has the right to become the operator of the mine within those 90 days. If not,
The right house, subject to what?
so essentially it's an option.
Okay.
Right, so 90 days post DFS, it's actually 90 plus 90, i.e. within the first 90 days, if they have a good excuse why they need another 90 days, so be it.
Yeah.
But essentially within those 90 days, Rio has to say if they want to continue being involved in the project, have to say to us, yes, we would like to become operator of this project. Now, I mean, what I'll say to that is Rio don't tend to operate mines on behalf of juniors.
Yeah, or others.
Yeah.
That's called a pause for effect. Okay, I'm excited to see what happens over the next few weeks. Okay, I think it sounds like it's a proper catalyst moment in the truest sense of the word, which we haven't seen for a few years from this market. And there's lots of things we can talk about, other things we can talk about, but I'm focused on the commercial reality because I'm trying to understand, like, for me as an investor, what should I be doing? I've seen the farming initiative. It looks fantastic. Some really good stuff going on there. With three times yields and so forth.
Yeah, I mean,
not
in
too
some
shabby,
areas
is
we've
it?
got like 8 times yield. So.
Really? So this is right. You get social license, etc., and fine from the government, and jurisdictional risks being
correct. Any mining company that's not looking after local communities and not engaging with the government is it's not doing things the right way and probably doesn't have far to go.
A lot of good stuff happening on the ground is what we're saying. And we will talk about it another time, but I think for right now, I think that's food for thought. Appreciate seeing you down here in London, Ian.
Yes, seeing you.
Yeah, well, you've got a whole 2-minute walk back to the office, haven't you?
Something like that.
I'm jumping on a train. Back to Cambridge. Right, well, like, see you, Sapan. We'll see you soon.
Great.